Hello, this is the Tradesight Market Preview for the week beginning Sunday the 8th and ending Friday the 13th. Friday the 13th, 2020. I did want to announce a change to our format for this. Typically, we've done a Forex market preview and a stocks and futures market preview over the years. As we get closer to launching Tradesight 4.0, which will combine our services and help people in all markets, we will only be doing one of these every weekend, and it will include all asset classes and a look at the economic data that will be coming out all the way around the world, depending on which of these you typically watched previously, Forex or the other. You might have seen different parts of this. So we're kind of combining everything into one. Again, if you want to be a true student and trader of the markets, it is best to know everything, not just focus on one thing. And so even if you don't trade additional asset classes or additional items, having this knowledge can still help you out, and that's going to be the focus of Tradesight 4.0 when it launches. So this is the beginning steps of that. We're going to start with the dollar index. This is the US dollar going back over almost a year, 9 months, let's call it. You can see how flat it's been now for a while. There is a 13 buy signal. We curled up off of that. I would say it worked enough. It never got to the culmination of the signal, which would have been the green line, obviously, but overall flat and heading towards the lows here. Could there be a breakdown possible? We shall see. We'll look at the daily charts of a couple of the major Forex pairs. So here's the euro dollar, which is usually looks like the inverse of the dollar index, and again, it does here. Very flat for the last 6 months, almost untradeable. The euro dollar has been. I mean, let me go back to that for a second. If you look at high to low in that range, I mean, barely. You're talking about 300 something pips for 4 months. That's really poor range on the euro dollar. Pound's also been fairly flat, although a little more action. Maybe 700 pips high to low, but if you take out that spike high over 3,200, now you're really talking about 500 pips for 5 months, 4 months. That's pretty late action wise. All right, we've got the Aussie dollar, also pretty flat. You're going to see the same theme here in all these pairs. Let's also look at the intra-week action. So what we do on the Forex charts, we look at the 30-minute candles. Remember, Forex trades all day long and all night long. So this takes you back. You can barely see the edge of the prior Friday. Monday was dead flat, and Tuesday we had a little bit of action. Overall, for the week, actually, it's funny, the euro dollar traded 300 pips for the week. Remember, we just said on the daily chart, looking at it, 350 pips is the total range of the last 4 months. It covered that range here in 3 days, but it's not much range, and you really want to get out of being stuck in a range to get some good trading activity. The pound dollar on 30-minute candles. We had the Fed announcement on Thursday that made it pop a little bit. You can see that 13 sell signal. And again, about 300 pips of range here on the pound dollar. So with the daily charts so flat and locked in, and the weekly charts not showing anything different, the intraday is not that exciting. I would say there's nothing on the charts to say about Forex at the moment. Just going to keep trading it the way that we do every day and see what it brings us. Let's turn now to the U.S. stock markets. All right, this is the ES front month futures contract. This is the daily chart of the broad market in futures form. Nice double bottom there, heading towards a potential breakout. We shall see. The COVID numbers obviously on the rise, and at some point you have to expect that will impact the market. On the flip side, of course, the market getting the Biden rally since last Tuesday. A lot of that was gaps, as you'll see, and not particularly tradable. We had a nice week, but not as many trades as we usually like to see in the stock side. Futures were fine. Nothing spectacular, but I do think we're going to have some good weeks trading-wise both ways ahead of us with all this stuff finally over. Let's go through the major daily charts as we always do. Crude oil down $1.30, and because of that blip back in April, let's scoot the chart so you can actually see what's going on here. Right, this is the more apparent look at oil, which is still to say not much. It's been dead flat for 5 months or so, but that strange action back in April that took it negative is messing up the charts. Gold up $4.70. And, it's been also fairly flat for the last 4 months. There's a lot that's been fairly flat for the last 4 months. The S&P cash loses 1 point on Friday. 1 point. But you can see for the week we were definitely up, and we'll look at the intra-day action for the week in a few minutes. But it was a strong week for the S&P, and also a big one for the NASDAQ. Here's the NASDAQ 100, which was up 13 points on Friday, but had some bigger days earlier in the week, particularly Wednesday after the election, and then Thursday following through. Again, same kind of pattern of the double bottom with the base, and we shall see if we can break out of that. That would be interesting, but I'm not sure if that's going to happen. SOX up 40 points, new highs of the SOX this week. Look at that, from where it was kind of stagnating out, and then Wednesday, Thursday, Friday in particular, big breakout. The biotechs, however, down 68. They were up for the week, but they did close down on Friday. The Russell 2000, the small cap index, finally making some ground, almost back to new highs, down 15 on Friday, but it was up again for the week, as was almost everything. The VIX retreated this week, and it was down to $2.72. Almost got to a 13 sell signal the week before, but still came in anyways. And remember, that red static trend line is probably going to be support on the VIX. TRIN closes at 0.74. That puts the 10-day moving average at 0.96. That's not a signal either way. Let me count the dots backwards. 1, 2, 3, 4, 5, 6, 7, 8, 9. We're about to take out. Here's the interesting part. The next 3 days, each day we will be dropping off a very high number off the trend, which, if the new number is low, could easily bring that moving average down. And remember, when the 10-day moving average on the trend gets under 0.85, that is a sell signal on the broad market. NASDAQ volume on Friday, highest of the week actually, 4 billion shares. We had rising volume throughout the week. The advanced decline ratio on the NASDAQ on Friday was negative 752. So remember, even though NASDAQ was up a little, more stocks down than up. The advanced decline ratio on the New York down 717. Google loses $2.77. Apple down literally 14 cents. That's a blip. Remember, Google was at all-time highs the other day. Netflix up 97 cents, holding. Excuse me, this has also been very flat for a while. Amazon down $10.63. Tesla down $8.14, but all these holding up in their ranges. Facebook down $1.27. Hit that green static trend line and stalled out. Goldman Sachs down $1.70. TLT, the 20-year bond ETF, down to $1.95. So the bonds are pretty stable right now. The Dow was down just 66 on Friday, which doesn't really matter. All right, let's also finally take a look at the interweek action. And what we do here is we go to the 10-minute candles. So now you can see the whole week on the S&P. Again, it was up, but except for Thursday, Friday, where it was dead flat, it was a lot of gaps, right? Monday we gapped up and then closed where we started. Tuesday, gapped up and closed slightly above that. Wednesday, gapped up again and closed above that. Thursday, gap up, dead flat for the close. Friday, dead flat all day. That's not a particularly tradable week the way we like to see it, obviously. There's not a lot of intraday action. It's a lot of gaps, and then Thursday and Friday being as flat as they are, obviously. If you look at the NASDAQ in the same way, the same problem. Monday hadn't gone anywhere. Tuesday made some progress, but then Wednesday, just this huge gap up. One of the biggest days in history on the NASDAQ, but you couldn't do much because it was already up. Thursday, another gap. So those 2 days alone, I mean, you got to look at the math there. But you're talking about a 900-point run in the NASDAQ from Tuesday's close until Friday's close, and well over half of that is a gap, or gaps, two gaps. All right, so those are the markets as we see them. I don't see any particular signals, no sell signals. You can talk about charts and patterns, but again, I don't know that there's anything super exciting unless the S&P goes and breaks out above that 3,600 level. That would be potentially significant. Let's get to the economic data for the week ahead. So again, here we're going to start. If you're used to watching the stocks and the futures, this is everything around the globe, which is what we do on the Forex report. So not much on Sunday. Leading indicators out of Japan. Remember, all these are East Coast Eastern Time, U.S. Leading indicators out of Japan at midnight. Unemployment rate out of Switzerland. Europe's German trade balance. ECB president speaks. I'm not going to get into all the speaking stuff. We'll skip that. Centex investor confidence out of Europe. Mortgage delinquencies here in the U.S. at some point this week. Loan officer survey some point Monday here in the U.S. Bank lending and current account out of Japan. We've got NAB business confidence out of Australia, CPI and PPI out of China, 30-year bond auction out of Japan, economy watcher sentiment out of Japan. UK has their unemployment rate at 2 a.m. Eastern Time Tuesday morning. French industrial production, Italian industrial production, M2 money supply out of China, and new loans out of China. ZEW economic sentiment out of the broad European sector, and then German ZEW economic sentiment at the same time. NFIB small business index at 6 a.m. JOLTS job openings at 10. We got the 10-year bond auction here in the U.S. at 1 p.m. Eastern Time. Westpac consumer sentiment at 6:30. M2 money stock out of Japan. And then New Zealand's got their rate announcement at 8 p.m. Eastern Time Tuesday night. Their press conference follows. Wednesday, preliminary machine tool orders out of Japan. French goes to bank holiday, as does Canada and the U.S. Remember, it's Veterans Day here in the U.S. What that means is, while the stock market will be open, the banks are not, and that'll usually slow the stock market down as well. German 30-year bond auction, visitor arrivals out of New Zealand, core machinery orders and PPI out of Japan, MI inflation expectations out of Australia, RICS house price index balance out of the UK, tertiary industry activity out of Japan. Going into Thursday, German final CPI and UK's preliminary GDP along with their construction output, goods trade balance, index of services, industrial production, manufacturing production, and preliminary business investment. That's at 2 a.m. Eastern Time Thursday night. That's a lot. 4 a.m. You got the ECB economic bulletin out of Europe, industrial production out of Europe, CPI here in the U.S., unemployment claims here in the U.S. So those are the CPI in particular is one of our big, what we call our big three in Forex. So we will be half-size Forex Tuesday night ahead of Wednesday because of the holiday, and Wednesday night ahead of Thursday because of the CPI coming out. Crude oil inventories here in the U.S. Remember that's pushed today because of the Wednesday holiday, bank holiday. Fed Chair Powell speaks. We've got 30-year bond auction. Got the government council member announce a speech. Federal budget balance. New Zealand's business manufacturing index and FPI. And then on to Friday where we have the German WPI, Swiss PPI, French final CPI, and flash GDP out of Europe and trade balance out of Europe. Core PPI here in the U.S. at 8:30, CB leading index out of the UK at 9:30, and then preliminary University of Michigan sentiment at 10, and natty gas at 10:30 again because of the holiday. So there's a lot of data there. That's this week. We had the Fed meeting last week, so that's done. We've already had the advanced look at the first looks at GDP and stuff from the third quarter. So nothing, even with all that, nothing super big. I think the UK's got the one night with the most information that we would care about. So it should be a fairly straightforward week. Obviously, focusing on the transition at this point in time, and we will see what we get. But we will talk to you Monday. Charts as usual, brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple of weeks.